is Mommy Beluga Investing.
Hi there, back again with me Rati in Mami Beluga Investing. In this video, I'm going to analyze Riverstone Holdings Limited with stock symbol AP4 and traded in SGX main board. I found these companies via SGX website stock screening feature. Now, Riverstone is one of the companies that has been positively impacted by the pandemic. After looking at the numbers, my quick take for Riverstone are: first, it is a very generous company in terms of dividend, which I like. Two, the company is in a unique position to benefit from the crisis. However, this, as we probably all know, does not equate to sustainable growth. But we will see later how this company is actually using this advantage to the best. Okay, that one, recently in the surge of exploded earnings and declining share price, the company is massively undervalued, which I like. It makes me excited in analyzing this company. Okay, how did I reach the above conclusion? Follow my video as I quickly discuss the company's profile, EPS since 2011, dividend, and other numbers. Please consider to subscribe because it means a lot for a beginning YouTuber like me, and it's free for you. If you have any comments or input, do not hesitate to put in comment section. It'll probably help me to gain more perspective and learn more. You can also access this channel in video through podcast, through AnchorFM, Spotify, Google Podcasts, Apple Podcasts, and other podcast platforms. Okay, before getting into the data, I read out its disclaimer first. Disclaimer: this is an amateur video. My main intention is to record my own journey, learning and practicing investing from scratch. Over time, you may find some inconsistencies in my analysis and conclusion. Please bear with me because my analysis is limited to the publicly available data and the scope of my knowledge, which both change over time. The video shouldn't replace any financial advice and neither suggestion to take position, buy or sell in the stock market. Please conduct your own research before making any decision. But if you do your own research, I hope this video could be useful somehow. Now let's start from a brief company's profile. Okay, Riverstone Holdings Limited. Riverstone was established in 1991 and listed on the main board of the Singapore Stock Exchange in 2006. The group specializes in the production of clean room and healthcare gloves, finger cots, clean room packaging bags, and face masks. Over the year, with the full support of valued customers and commitment of the staff, the group has grown to become the leading global supplier for clean room and healthcare gloves. The group's products are qualified and widely used by major global players in the electronic and healthcare industries. It exports more than 80% of the products to key customers in Asia, America, and Europe. As a global supplier of clean room consumables and healthcare gloves, currently the group has 5 manufacturing facilities. They are in Malaysia, Thailand, China. And the group has also established a network of sales offices and strategic partners in Asia, the Americas, and Europe. The company has been in expansion mode for the last 10 years, and we can see on the screen how the capacity of the company increased. From its 2021 annual report, the company's executive chairman and CEO, Mr. Wong Teck Son, hope I pronounced his name correctly, has 50.75% deemed interest in the company. Okay, and next, here's the 20 largest shareholders. We can see that iFast has 0.2% of the company's share. Previously, I have analyzed iFast and see how the company's growth is has a massive growth recently, but still for me the price is still quite expensive. Okay, returning to our current company, Riverstone Holdings Limited. That was a quite quick company's profile. Now let's have a look at the company's performance. Let's start from its EPS history. Okay, so here I plotted earnings per share for the last 10 years since 2011. I also added the horizontal green dashed line as a guide to zero level. Earning below this line indicates the company is recording a loss for that particular year. Quickly, we can see that Riverstone hasn't recorded any loss in the last 10 years. Historically, Riverstone had a relatively moderate earnings growth from 2011 to 2015. The companies attributed the growth from company's capacity expansion, increase in efficiency, and increase in automation. It had earnings drop in 2016. The company's CEO mentioned that the company operation was impacted by increase in fuel price and labor costs. The fuel price increased by more than 20% for that year, and labor cost was increased by more than 10%. The earning was then pretty stable, from 2016 to 2019. It had seen a massive earning increase from 2020 to 2021, as we can see on the screen, which coincides with the COVID-19 pandemic. Looking at the annual report, we know that the demand increase for gloves during COVID-19 pandemic was not the only reason for this increase. The company seems to be in expansion mode for the last 30 years. Their production capacity have grown exponentially since then. It seems that they are still expanding. Their current capacity is 10.5 billion gloves and is expected to grow to 1.5 billion gloves annually from 2022 onwards. It is a kind of foresight, the company, that they had so demand increase way before it happened. Okay, for me, the next question is, how did they finance their growth? One way to look at is checking the cash and liability position. Okay, so here I plotted their cash position for the last 10 years, superimposed with the EPS plots. And here I added their current liabilities for the last 10 years. As we see on the screen, the company seems to have sufficient cash to finance their operation. There were periods between 2016 to 2019 where their cash margin seems to be very thin. In 2020, the company have more, very thin. And then in 2020, the company has more cash to cover their short-term liability. Hence, the picture seems to be great for the company. Okay, next, we'll take a look at what are the perks as shareholders. So far, so good for this company, but I'm curious of its dividend yield. Let's check out in the next slide. Okay, to see the dividend payout and its sensibility, here I plotted 3 layers of information. The first one is the dividend payout over the last 6 years, which are plotted as red round markers connected by a thick red line, as we can see on the screen. Okay, on each of the points I've annotated with 2 numbers, the numbers above the markers, the numbers below and above. Numbers below the markers are payout ratios for the respective year's earning per share, and then the ones the ones above is the dividend in Singapore dollars. As a comparison to the earnings, here I plotted back the earnings per share as a thinner line with the same color, red. Okay, now let's look at what we have on the screen. For the last 10 years, we can see that the dividend payout has been steadily increasing. Historically, we can see that Riverstone is very generous with that dividend payout. But in my opinion, it's too generous. Since 2011, the company regularly paid dividend more than their earnings, except in what we can see on the screen, 2014 to 2016, and that 2020 and 2021. So this picture is still sitting less comfortable for me because the dividend payout is quite high, usually quite high. Okay, and here I add again the company cash position in comparison. I like the situation better here as the company seems to not overindulge their extra cash as dividend. They didn't actually spend all of their cash as dividend. Okay, it's quite comforting for me, at least. Okay, now let's take a look at from a different perspective. Thus, the dividend payout beat bank deficit, or even CPF interest. If you have watched my financial summary video, you will know that I aim for 6% annual dividend yield. Here I plotted the average dividend yield per year as the red round markers. At each markers, I place an error bar, which represents the range of yield over that year. The variation in a year is caused by the volatility level of the share price. The yield increased if the share price decreased, and vice versa. We can see that most of the time, Riverstone dividend yield does beat the bank deposit interest rate. It is not necessarily safer than bank deposit yield, though, as you could incur capital loss as compared to depositing your money in the bank. As my dividend yield target is 6%, I'm happy with Riverstone's latest dividend. Next question is, does the price attractive enough now? Okay, to see Riverstone's market valuation, here I plotted 4 layers of information. They are, okay, the first one is the price, which represents market valuation of the company. It is also the easiest information that I can obtain. I can use the search term Riverstone share price and it will pop me with this graph. The price alone is sometimes misleading for the value of the company, as all we know, and its prospects as well. So I include some fundamental indicators to help me to decide. The second layers of information is the 10 times earning multiply, which here I plotted as a dashed green line. 10 times earning multiply can be considered as the price where price to earning, that is a PE ratio, is at 10. For me, I consider 10 times earning multiply has 2 purposes. The first one, it indicates the price where I expect I have higher chance to break even within 10 years. You could plot 5 times earning multiply if your investment horizon is 5 years, for example. Second, as a consequence for the first reason, I consider share price above this 10 times earning multiply to be expensive. The third layer of information is 15 times earning multiply. With the same principle as 10 times earning multiply, price above this indicator will be deemed as expensive. Here I plotted the 15 times earning multiply as dashed yellow line, just like the traffic light. I'll start feeling nervous if the price crosses this line, particularly for non-growth company. Okay, the fourth layer of information is the 20 times earning multiply. Here I plotted as a dashed red line. I consider the share price to be super expensive if it ever crossed this line. For non-growth company, I consider to cut down my position if this ever happened. So now let's see what's going on with Riverstone share price. We can see, okay, let's see on the screen. Yeah, we can see that the price is generally increasing from 2010 to 2020. Okay. Yep. There was also a massive increase from early to mid 2020, and since then it's a downward trend. We can see a similar trend from another glove company, as we can see on the screen, Top Glove. From the valuation, Riverstone is historically an expensive company. As we can see on the graph on the screen, most of the time the price is more than 20 times earning multiply. But then, in 2020, the market went into euphoria that the share price increased much earlier than its earning. Strangely, the share price then decreased, though the earnings increased massively afterwards. Okay, now let's move on to the reasonable price. Let's put on the numbers now, yeah? So here I add the price annotation for 10 times earning multiply. Based on the current 10 times earning multiply, I put the reasonable price at $4.6. As of 28th of January 2022, when this video was prepared, Riverstone stock price was at 67 cents, which is far below my comfortable price or my reasonable price. Coupled with its growing capacity, I am very interested in putting a small position in the company. Why small? Because my capital is small. Okay, wrap up. In conclusion, it is a generous company in terms of dividend, which I like, as long as the company doesn't distribute all of its earnings. Okay, the company is in a unique position to benefit from the crisis, as we have seen before. Yeah. However, this does not equate to sustainable growth, but the company seems to be prepared for it, as it has been expanding its capacity before COVID, and it's still in expansion mode at least until 2024. Recently, with the surge of exploded earnings and declining share price, the company is massively undervalued, which I really like. Has been a while for me until I analyze this company, because most of the company that I've been analyzing so far has been overvalued. So I'm quite excited to see this company. Okay, as I've mentioned before, I'm interested in putting a small position in the company. Why small? Because my capital is small. This is my first 2022 company stock analysis video. To mark it, I would like to summarize my learning journey so far in doing stock picking. At the end of the day, either way, yeah, I will end up with regret. Why? If the price goes up, I'll regret the loss. If the price, if the price goes down, I'll regret the loss. If the price goes up, I'll regret that I didn't buy enough or I didn't buy more. So it's good if I can keep telling myself, don't be greedy. Okay, that's all for today. Please consider to subscribe because it means a lot for a beginning YouTuber like me, and it's free for you. If you have any comments or input, please do not hesitate to put in comment section. It'll probably help me to get more perspective and learn more and probably come up with better analysis. You can also access this channel and this video in podcast version through AnchorFM, Spotify, Google Podcasts, Apple Podcasts, and other podcast platforms. That's all for today. Thank you very much and bye. Have a good 2022.